Thank you so much to the panelists for joining us this evening. I think if we look at insurance as a sector, right? I know we're talking about inclusive insurance, but there are very few sectors that are designed or industries that are designed to be inclusive. The fact that we are pooling risks together fundamentally makes insurance an inclusive industry to be in, and I think that's a great starting point for us to just think about and reflect on what we can accomplish as an industry. Um, for us to be able to get to the next level, like if you look at the most recent data that the IIDI has published, we are between 4.2 to 4.3% of GDP in terms of penetration when it comes to premiums. The next frontier obviously is to make it to the next tier of our populations and our citizens in India who have historically not been able to buy insurance or have not even participated in financial services. And I think one of the barriers has typically been awareness. Obviously, we've come a long way in being able to overcome that barrier. Would love to get your perspective. Maybe Rajiv, we start with you in terms of how have you seen the barrier of awareness being overcome, and especially from a digital standpoint, right? Because that plays a key role in being able to access newer populations as well.
So I think I represent InsurTech industry. I mean Policy Bazaar. So over the last 15 years, I would say Policy Bazaar has done enough to create visibility and awareness as far as the insurance business is concerned. Now, coming to your point, how do we reach out to a segment which has been ignored, or how do we address the protection gap which has been prevalent in this country? I mean, so what we've done over the last 2-3 years is we've also built a phygital model in the sense we've gone offline 3 years ago. So we represent about 97% of India's PIN codes. Now, the biggest challenge in these markets is how do we create the financial literacy? I mean, while Jandan accounts, initiatives like UPI, have all reached those pockets, but people should know why buying an insurance is so important. So, education in terms of financial literacy is crucial before we can penetrate into those markets, number one. Number two, obviously, how do we create visibility? The visibility can only be created if you create local influences in those places. I know of NBFCs who operate from tier 2, tier 3 cities, and they have appointed local women from the same village to represent their products. So in a way, I think, one, we educate those people first, in turn depend on those local guys to create groups to influence and educate the other people in that market. I think that's the way I would say we can probably make a beginning.
Got it. No, Rajiv, that's very helpful. Suresh, maybe pivoting to you next, right? Have you seen a shift in the last 2-3 years? Obviously, COVID put a little bit of a bump in the industry's growth, and then there was a little bit of a splurt, especially on the health side. But have you seen a shift over the last 2-3 years in terms of awareness? And to Rajiv's point, like incumbents have a lot of physical distribution.
So Siddharth, I think the challenge in the industry is not so much of awareness anymore. Okay. I mean, to be fair, LIC has been in the country for many years, and almost everybody knows about LIC insurance, right? And then the private players came in. I think COVID in many ways brought insurance right up forefront, where everybody got to know about the need for insurance, right? I think many of the government schemes like PMJJBY, everybody knows about many of these schemes, so that that. So really the challenge is not anymore in the country to be aware of insurance as a product. I think there's a little bit of inertia, and then the inertia converting to people actually going and buying insurance, which is why our penetration levels are so low. But if you really ask me, the way and I'm sure even if you go to the smallest of towns, in fact, almost 60-65% of our business at HDFC Life comes from the tier 2, tier 3 markets. What Rajiv mentioned is every corner of the country now has a bank branch expansion happening, right? And whether it's the PSU banks or the private banks, we work with almost every bank, every NBFC, every small finance bank, every ecosystem. We're large partners with Policy Bazaar, we're large partners with every bank which is there. So really it is no longer an issue of taking insurance to at least a tier 2, tier 3. Right? I think off late the awareness also in terms of how do we take it to really the rural areas or get into those markets. Some of the government and the IRDA led initiatives in terms of Bima Vistar, Bima Vahak, where you take it to the end Gram Panchayat. So it is now a question of how do we reach and convert and make sure. And both on the individual side as well as on the group side. And I think really when you talk about inclusiveness at the really upcountry markets, the tier 3 and the rural markets. The question is, how do we go back and take products like PMJJBY or other group products where we can go back and service the insurance needs. So, and of course, in terms of marketing and visibility is no longer a challenge. I think, the way telecom has gone into each of these markets and how we have also ridden along with telecom to some of these markets. So it's now a question of how do we create those products to be able to solve. So there has been a shift. I think post-COVID, you're right, there was a little bit of a bump up in terms of the protection requirement. But given what is happening and, the IRDA and the government vision of making sure that by 2047 every Indian should be covered, I think it's
a great point just on product itself, right? And so then maybe you can weigh in from your experiences. How does one underwrite a risk of populations that we've historically not been able to underwrite very effectively? Do we have enough data? With the advent of third-party data sets, do we feel comfortable as a sector that we have all that we need to effectively underwrite the risk so that it's affordable and at the same time it's not it's profitable for the industry as well?
I think data is a challenge. So much as we would like to have very intrinsic data and well characterized across tier 4, tier 3 and rural area, data is still a challenge. But having said that, Aadhaar has made some inroads, PAN, Aadhaar and the mobile network. So, but the KYC even at the telecom level is not so great yet when you actually go to enforce that. And so products, there is a liberalization that has come from regulator. Now you don't need to file the products, you can do use and file. Yeah. So the ability to change the products or refine the products as per needs is there. And if you see some demand for a product in a particular location or a particular place, you can actually come up with a product. That's there. And then of course, Suresh touched upon telecom, and that's a very important initiative. So if you're able to sell simple products or products in a simplified manner, yeah, using telecom, using mobile, and then you use mobile to buy, then it would work. I think it's already there. All the underwriting, those supply side, those things are there. It's just that the awareness needs to creep up, and much more needs to be done on awareness side. And to underwrite data in a mass way, you have PMJJ experience, but the pricing is still a challenge. The supply side, we still find the price tough, and we need to have the flexibility to change as per the underwriting requirements. Coverage should be there, but ability to reprice or price more than what is given the underwriting risks, which are different in different parts of the country, different occupation, different lifestyle, different places. But so coverage should be mandated. I think that there is some need there. But then you can't then say we'll price only at this rate and then you sell it. It's very difficult. And then you'll have the suppliers wondering where is the profit margin and profit share. So it's not possible in that sense. There are a lot of changes even again in the norms of the government. Now it's getting tougher and tougher for the supplier side to make money or have adequate profit margin. There's already talk about surrender thing coming in products wherein you'll have to offer a certain price. All this requires deep reserves to back the product, and then that kind of reserve you can't price the way it is you asked to. And so you'll have to meet these challenges when you think about the country and the largeness of that. At the same time, again, if people do not have money, they are below, just above the poverty line, and then how can you force them to buy insurance? Then you mandate insurance in a certain way, in a group manner or something like that, and cover bulk of the population. Then you can achieve 2047 motto of insurance for all.
Yeah. No, I think that's a very valid point. And if you look at India as a country, obviously micro insurance, group insurance on the back of microfinance, we made a huge headway. Piyush, in terms of product innovation, where do you see the next wave of innovation coming from, especially to cater to historically underserved segments, the missing middle as we often call it?
I think I would like to start with something which Suresh covered in terms of inertia. So inertia is coming from the consumer not engaging in the product, and not engaging in the product because like they find it a complicated topic, like something which you talk many times. Like when people get married, they'll talk about what is the income earning on either side. They don't talk about what will happen if that earning is not there, which is that's where the insurance comes in. So if you look at last 10 years, the innovation which has happened on products is phenomenal. Whether it's protection segment, whether it's retirement segment, or even on the savings and ULIP. Still, and PMJJBY, I think somebody covered that. I think it's a brilliant initiative to what Sundar talked about, people who are near poverty line, people who can't afford significant premium, but they can afford 500 rupees for the year, and the 2 lakh cover is significant, like kind of for that profile. So there's a lot of innovation which has happened. I believe something which we need to crack as an industry and as a society is like people who are the youngsters at the age of 23, 24, 25, how do we make them understand the value of protecting their future, protecting the future of their family, and start participating from that stage. But generally when people enter at the age of 40, I think it's slightly late. And many times you have seen events which like at an early stage, people should have got themselves covered. So that's something which we need to cover for. In terms of the missing middle which to talk about, I think affordability is kind of taken care of. Like today, the products are offered across ticket sizes, across premiums. And people can choose what they want. What duration, what kind of cover, what kind of cash flow objective they would have. So I think there is enough which is done. Certainly we can do more. If you look at internationally also, except a few products which are linked to market, like index-linked annuity kind of thing, I think most of the products are available in India today. And again, someone talked about the liberalization which relaxation which IRD has come up with, where the products can be designed and launched by the company itself instead of going back to IRD taking approval, which used to take slightly longer. So the response time has improved significantly. So if I see an opportunity, something a consumer would want, something a consumer would value, we are able to respond in a month's time today. So.
No, that's a very interesting point you make, and maybe Rajiv, I'll come to you. We still see that persistency levels in the industry are not where we would want it to be, right? Across life, motor, in motor, especially when it comes to two-wheeler, it becomes a lot lower, after year 3, year 4. If we go by, what has been discussed here, that awareness has increased. Once the customer has experienced the product, they know what they are protected against. What can we do more to drive persistency, thereby protecting the insured as well as ensuring that the policy life cycle continues and insurers and distributors are also remunerated adequately?
So I think on the life side, since I also spent a decade in SBI Life earlier, I can certainly see a sea change in terms of the improvement in persistency. I mean, right from 13th month to say 72nd month, I think the persistency has certainly improved a lot. People realize that if you buy a life insurance product and if you don't pay, it doesn't help them in any way. I think so. That is one area which is taken care of. When it comes to motor or health, obviously today there's a lot of selling happening, service issues, trust deficit. So people putting from one company to the other because they are not long-term policies, they are on annual premiums. Yeah. In case of health, you do have 3-year plans, and now you offer those third-party insurance for 3 years. But I guess that's one area which can only be resolved if the trust deficit is removed. And so somewhere, how does the unit work together? I mean, when it comes to health insurance, healthcare industry, the TPA, the insurer, the agent, or the middleman, I think all of us have to come together to ensure that the customer experience at the time of buying remains the same at the time of when he wants the claim. I mean, that's the biggest challenge which today people face. And a lot of steps are being taken by everybody. I would say the insurers are taking their own step. The TPAs are integrating very well. Now, we as a broker, Policy Bazaar, we have started offline physical centers in about 127 cities of the country where physically our people are present to assist in claims, be it motor or be it health, predominantly health. Motor doesn't require so much of assistance. Yeah. So somewhere that integration of dealing with too many people, and getting a shock that this is not covered and that is not covered, You raise a claim for 1 lakh, you get paid 80,000. People are not aware why the 20,000 is not paid.
Yeah.
So somewhere all this will have to be reworked, creating a document which educates people at the time of buying that what are you going to get covered when you buy a policy, be it motor or health.
Yeah.
So important is to take care of that first. And number two, at the time of delivery, I think when it comes to claims, the experience will have to be much more better.
And Suresh, maybe I'll go to you next. At least on the life side, we have interventions such as PIVC, more digital, analytics being run right up front on who we need to check for. But what more can we do to actually build that customer trust, and potentially with, if a composite license was to come and foray into health and all, how do you want to build a relationship wherein your customer is looking at a holistic financial well-being portfolio from HDFC Life and other insurance companies?
So, Siddharth, if I were to add back to the first question on awareness, I think two other things have happened in the industry over the last many years. One is this whole piece in terms of transparency and simplicity of the products. The way even the regulator IRDA has gone back and ensured that products are simpler, the charges are simple, they're capped. So one is that to say that how do we make sure that the charges and the benefits to the customer are better and they're capped. So it has come along with awareness, along with a little bit of simplicity and transparency in the products and in terms of being customer friendly. The third thing which has happened, frankly, is this whole technology which has kind of allowed us to reach out to the end customer, whether it's in terms of sourcing the policy or servicing the policy or even the claims which has come in. So really all three go in tandem, the awareness, the product simplicity and transparency, and third, the technology, right? Now, obviously, when you go to the customer, we have one of the best-in-class persistencies in the market. But the idea is to make sure that the customer understands the product not just at the time of sale, but also at the time of renewal, right? And it's not that you've sold the product once and then you forget about it. The customer understands. So it is, in some sense, a continuous engagement which can now come with either technology. And you have obviously the advantages of technology to have a standard instruction where the customer doesn't forget to pay, stuff like that, which can be done, right? On a second aspect to say, how do we build trust with the customer? I think the trust with the customer comes when they see claims being paid on time, which is the best. So, you'll have the best in terms of claim settlement. You see the servicing getting done. You see the families around you benefiting by what claims are coming in. And I think that has started showing clearly trends in the industry, which is happening. On health specifically, and given composite license you're mentioning, we are equally keen to see that composite license plays out. Look, at the end of the day, the customer needs to be covered for both the mortality and the morbidity, right? And you want to make sure that the customer, when he's engaged with, and worldwide, actually, life insurance companies look at health. In India, we only sell fixed benefit products. But even with fixed benefit or indemnity, the advantages are tremendous. So when you go to a customer, at one shot, the same medical can cover for life and health. Right. Second, life insurance is a low engagement product. You sell and you don't then engage with the customer. Health is a much higher engagement product. So then it allows the life insurance companies to kind of engage with the customer a lot more often. Third, in terms of underwriting health, you've got the customer's background and the health checks. You can use that for life insurance. So you can offer better products, better pre-approved, better medical limits. Right. All that can be done. And finally, if you were to add value added like wellness propositions. So, in some sense, life and health. And really what will happen is when the customer sees the entire benefit of life and health coming, the trust builds, right? And so then finally, life insurance is about claims, right? And you are able to ensure that whoever is covered, of course, other than the savings, mainly about claims. And you see that, look, there have been years when we have settled like more than 3,83,000 claims for 4,300 crores. That's the number of families that we have gone out and touched in terms of claims service. I think over a period of time, that will build into long-term trust for you.
Trust with the customers. Wonderful. Sundar, there's been so much talk about technology. I think with technology comes a fair bit of risk as well, right? When it comes to cyber risks, when it comes to consent architectures and ensuring that individuals' privacy and rights are kept in mind. How should the insurance company think about it in terms, especially when dealing with segments that have historically not been as, they've not been made aware of the risks that come with technology. I mean, as Indians, we tend to give away our data a lot more freely than many other citizens from around other countries, right? So what are maybe some thoughts on that?
I think I've worked in banks, mutual fund and insurance companies, all the three, entire BFSI space. So I see marked improvement in way insurance companies understand cyber risk.
Yeah.
And there are tremendous investments on security, architecture, and machinery, and logging, and monitoring. So I think the understanding is fairly mature now at this stage. Initially it wasn't so. But insurance is caught up with banking, more or less. I think if you see the investments, everybody is invested heavily on various security equipments that are required, audits, monitoring, logging, everything is there. So in terms of people, process, technology, I think we caught up sufficiently. Coming back to the other question on persistency, I had a journey from 56% to now 82.5.
Yeah.
And the whole journey was technology enabled. So we used to take the technology consent from the customer, call up the customer, welcome calling, then you have confirmation calling saying these are the things you bought and you're aware clearly that you have to pay premium for 10 years.
Yeah.
And that improves persistency a lot. You take up checks in advance, or you take a EFCS, financial transfer, which the customer does. Beforehand, the persistency jumps up. We also take 2 mobile numbers now, and that again persistency jumps up. So each and every technological advancement that you do, the persistency jumps up. So there is a lot of awareness of technology usage in the industry. It is highly technology driven, probably the number 1 or the number 2 expenditure if you take people into account.
Yeah.
And I think it's quite risk management and security is quite advanced now. So I wouldn't be that worried about companies grappling with technology risk. Even LIC is going for digital transformation and an agency transformation. We've appointed BCG and Neti Kearney and a lot of support. EY is doing the risk management. We have done the risk management. So there's a lot of support companies seek to go ahead with the journey. And it has certainly helped persistency also and awareness about cybersecurity.
Yeah. I'll maybe catch you off the stage on
Sure.
data privacy. But Piyush, maybe the last question to you, just in the interest of time. It would be a missed opportunity if we don't talk about generative AI in being able to get to the next tier of customer, playing a significant role in being able to get to the next set of individuals, whether it's vernacular, whether it's other interventions that can really help us drive inclusion.
I think he would have been better expert on Gen AI, but so what I believe is like one of the life insurance model, the way it works is because of the need to sit with somebody and explain the product. There is huge dependence on human beings, whether it's your employee, all your agents, or your partner employees, etc., those kind of things. And ensuring that at each interaction, the communication in the way you would want, the communication standard, that becomes difficult. A Gen AI kind of solution, like for a call center kind of thing, it can ensure that the initial pitch is identical. It can ensure that whatever is being communicated, so whatever people are talking, you can on the go, training could be done on the go, factors can be identified and can be corrected kind of thing. Like even the communications or like what you want to drive, what are the initiatives you want to take, a lot you can do on Gen AI because like it's able to adapt. It's able to learn on an ongoing basis, the way we human beings learn. So a lot of things which we are doing today, properly adapted, today it's very expensive because for each ping you have to pay and that's damn expensive. But once it becomes more economical, I think a lot of use cases will develop and the ability to reach out to larger number of people in a shorter period of time. So many years back, people started selling insurance on telephone, telesales model which started. Yeah. The biggest advantage was that like if you have to reach out to 50 people, you can't do it in a day. But when you're calling on the phone, you were able to reach out to call 150 people and talk to say 20, 25 people. And that helped you reach out to people and sell to the large number of people at different time. So I think Gen AI will bring that kind of revolution where your ability to reach to larger number of people at a much more economical cost and at much faster the pace would be possible. At the same point of time, it would be able to speed up things and make them more efficient on the back end.
Got it.
There are a lot of things which you can do on the back end side.
Got it.
So if I can just add, Siddharth, there are obviously a lot of interest in what we can do, but clearly 3 areas which emerge on Gen AI: underwriting, the call center, as well as distribution marketing. And we can expand on this, but clearly underwriting also is a huge area of where Gen AI can come in and ease the process of insurance.
Even the risk management side, AI can speedily identify a fraud or a outsider in the framework.
Yeah.
So there are many frauds that have been caught using AI faster.
Thanks for that. Maybe any questions from the audience?
Hello. Thank you for the engagement. My question is, let's say from awareness point of view, so demand point of view, there is awareness and people are okay. From supply side, do the insurance company have lack of incentives, as in because the ticket size will be less in those areas, more and more network and capacity building will be required. So are there any lack of incentives on the supply side at least, or how do we see things progressing there in the future? Thank you.
So hi, I think from a supply side, there is firstly no dearth in terms of the value proposition. The products are all available. So if you really look at it, there are products on the individual side, there are products on the group side. There are products across ticket sizes, with the smallest of ticket sizes to very high ticket sizes products are available. So it's really not a question of how do we be able to provide something if the customer is interested, right? And depending on the customer profile, there are products which are just pure term, there are products on the unit links, market link side, there are products on the guaranteed side. So the products are all available. Now the question is, especially in terms of inclusiveness, how do we take it to the smaller markets? And you will find that slowly from tier 1 business, the insurance companies are expanding to tier 2, tier 3. In fact, like I mentioned, for us, almost 65% of the business comes from tier 2, tier 3. A lot of the insurance companies are setting up branches or setting up their financial consultant setups in the middle and the smaller markets. But really at the end state, which is really in the rural and the social obligation, which is there, and in some sense, IRDA mandates that every company needs to do a certain number of policies. There are a lot of initiatives which is happening. The biggest one is the whole Bima Vahak and the Bima Vistar initiative, which the IRDA chairman is looking at to say, how do we take it to every Gram Panchayat? So every insurance company is expected to own a certain number of Gram Panchayats. The second, a lot of these products are on the group side, like how Rajiv had mentioned earlier. Finally, it's about assessing the risk, either it's in terms of the health profile or in terms of claims or investing the claims. The best is you design products which are small ticket size, which are then available for a huge number of customers. Because the risk in insurance is if you sell a product and it goes only for negative selection, for people who are unwell, it will not be a win-win for either the customer or the insurance. Really, you need products which are small, which are then available to, let's say, the entire village or the entire small city. Then you cover the risk, and that is how insurance was born, right? If something happens, the rest of the city kind of pays for that. So there is no real demand either, or no real supply side problem in terms of designing products or reach out. And with technology, whether it is fintech or whether it's telecom, for instance, we had a product where we had built in a product to one of the telecom prepaid products, right? So whenever, and everybody has a phone now. So you can build it into that like a sachet product. And if you take this product, you have plain insurance, or you have plain telecom services. But if you take it along with this, you have a built-in insurance. So, these are the kind of innovation which can happen to be able to take products to the end customer in the rural and so on.
Thank you, Suresh.
Okay, thank you. That was an interesting session in such a short, sweet span of time. May I now request Mr. Siddharth Shah, moderator, to present a memento to Mr. Suresh Badami as a token of our appreciation and gratitude. To Mr. Piyush Trivedi as a token of our appreciation and gratitude. To Mr. S.V. Sundar Krishnan as a token of our appreciation and gratitude. To Mr. Rajiv Kumar Gupta as a token of our appreciation and gratitude. May I request Mr. Dr. M. Narendra to present a memento to Mr. Siddharth Shah, our moderator, as a token of our appreciation and gratitude. Thank you. A group photo panelist. Thank you to all the panelists. Ladies